but Zillow is sticking with its optimistic 2025 housing forecast right now. Orphe Divounguy is Zillow's senior economist, joins us right now at the take. And Orphe, this interest rate story is one that's going to be of a particular interest to home buyers out there. So what is the forecast for rates next year?
Yeah, look, we all tend to overreact a little bit to economic news. Higher productivity means the economy is strong, but it's also slowing. I think slower growth than anticipated in 2025 could actually result in more Fed rate cuts than currently anticipated. Yields and mortgage rates could potentially ease somewhat. And so with lower mortgage rates, easing mortgage rates from where they are right now, we expect home sales to actually increase in 2025.
If home sales are going to increase, where are we going to see most of the activity, Orphe? Is it going to be in the previously owned homes, existing homes, so to speak? Is it going to be in all the new construction that people are trying to put on the market?
Look, I think new construction will continue to dominate. We saw new home sales increased again in November, despite the increase in mortgage rates. The mortgages have been increasing somewhat since I think September, October. So new home sales are up 9% from a year ago. We should see existing home sales also rebound somewhat, maybe not as much. Homeowners are starting to come back on the housing market. Inventory is up about 17% from the previous year, from last year. And so more options for buyers, a little bit more bargaining power, a slight improvement in affordability could be good for the housing market. It's going to be a healthier housing market in 2025.
Orphe, are there specific geographies that you're keeping track of as to be where will be hot and where will be kind of colder, relatively speaking, in the U.S.?
Yeah, I think, look, you have markets that have built a lot. So those markets are kind of Austin, Texas, some of the Texas markets. You have the Florida markets where inventory is much higher than it was before the pandemic. I think those markets are going, with more options, those markets are going to benefit somewhat in terms of sales, total sales. I think that's probably where we're going to see a little bit of an increase. You also have markets near these big job centers, like these expensive markets like New York and Boston. Markets surrounding those areas, slightly more affordable, could also see an uptick next year.
Orphe, when you look at the geographic locations of the housing, how much focus are you putting on back to work, where now companies are not demanding but asking in a very firm manner for employees to be in 5 days a week? Do you think that's going to put pressure on homes, on secondary homes that people bought during and after the pandemic?
Yeah, if you look at the data, our data, Zillow surfers, where are Zillow surfers looking? They're definitely looking closer to those job centers, right? We're looking at places like Sunnyvale in California, slightly more affordable than Palo Alto, for example, right? Some of those markets are starting to see a bit of an uptick in the number of people searching in those markets.